The weakness in the economy is expected to continue, exacerbated by the rolling blackouts. According to the bank, the local economy will experience a technical recession as a result of the contraction recorded in the major productive sectors of the economy, the mining and manufacturing sectors in the fourth quarter. The continued intense blackouts are hitting business operations and consumer sentiment. This will likely lead to further contraction in the first quarter of this year.
There's a real risk here that a lot of the capacity that the government wants to bring in online this year does not come through online. But we still do believe that some of it can come through online this year. We just don't believe that it's going to be the full 8,800 megawatts. We think there's a lot of downside risk to that. So in a scenario where you get maybe even about a quarter of that, maybe even about half, we think load shedding probably does continue, but at a reduced intensity, which is why in our assumptions for our growth forecast, we've assumed that you're probably going to see maybe in the second half of this year start to average about stage 2 of load shedding.
Inflation is also seen continuing on its downward trajectory. This will likely lead to the Reserve Bank coming to the end of its interest rate hiking cycle.
We think inflation will continue to come down. We averaged 6.9% last year. We think it's going to be 5.5% this year. We think we're going to come back into the target range by May this year. We think that helpfully this also means we are close to the end of this tightening cycle. It's already been 375 basis points. Our baseline view is that the cycle has topped out, but I think the risk is that we do perhaps see a little bit more in the short term, but we do believe that South Africans should expect that we are now very close to the end of this aggressive interest rate hiking cycle that we've seen over the last year or two.
The ABSA report says although the environment remains uncertain, if inflation continues to ease, it will allow the MPC to keep the repo rate on hold. This will allow for 2 possible rate cuts of 25 basis points each in September and November. Gloria Sefakomosi, SABC News, Johannesburg.